Good morning, everybody. Welcome to another day of the Sense of Things with Ron and Jeff. And on today, we'll start off, of course, with our usual what happened in history. Ron's got a really interesting thing about a Civil War cannonball, so we'll leave that. He's going to cover stocks versus the CAPE ratio and margins versus the CAPE ratio, which I'm interested in seeing. He'll also give us an update on the S&P 500 sectors and where they are for the year. I'm going to cover really three interesting economic reports that happened over the last week that I think are the quiet beneath the storm that's been happening with AI and everything else. These are nice, quiet things that are going on that I think we need to watch closer. And last but not least, we will revisit what I covered a couple of weeks ago on the yen carry trade after we had seen the US and Japan go in and try and prop up the yen. We'll see where it is today. So stay tuned. We'll be right back on in just a second. Hey, everybody. Welcome to the show. Ron, how are you, my friend?
Good morning. Doing well. Yeah, CPI information. People love the economic data when the earnings data is starting to slow down a little bit.
Yeah.
The next big one that'll come out is NVIDIA. I think that's next week or the week after.
Yeah. Actually, next week's a pretty busy week because you got a lot more of the retailers and stuff like that. So I think the retail sales number tomorrow is going to have some effect on the retailers and how people look at that. But other than that, that's pretty much the end of anything that's of any importance for this earnings season.
Yeah, I hear you. All right. So
Yeah,
your
what do you got?
history. Got a lot to go through here. I'd started out kind of slow and then it really picked up. 30 BC, just in case anybody cares, Cleopatra dies of suicide.
Wow.
I'm not sure how they figured that out with this week, but that's okay. I know the
Yeah, no
calendar
kidding.
was similar, but all right. 1776. This week, London learns of American
That's right.
independence, where, of course, if they had the internet back then, they would have found out
And they
about
would have known right
2
away.
minutes
Yeah.
later, right?
There would have been live streaming in the Constitutional Convention and everything
And
else.
they would have held up to show everybody their signatures.
Yeah.
93, the Paris Louvre Museum. That was
Wow.
interesting.
I
I
didn't
didn't
realize it
realize
was
it
that
went back
early.
that far.
Yeah.
1896, gold discovered in them hills
In
up
them
in
hills.
Utah,
Yeah.
which would not be another U.S. state for more than 50 years.
Yep.
1914, Panama Canal
Ah,
opens for traffic.
this is a big week.
1934, first federal prisoners land on Alcatraz. And I had to look that up because I thought they were there earlier, but it wasn't. It was just more of a military stronghold for quite some time. Because if you think about it, Alcatraz was only a prison for 30 years because I think it closed in 61 or 62.
Yeah, because it was just falling apart at that point.
Yeah, so I just found that to be interesting. 1939, Wizard of Oz opens.
Hey, it's in our colors, so that's the best part about it.
I didn't realize it was a book from the late teens or the 20s that they
Yep.
converted into a movie. And yeah, it was the first major motion picture in color. And I think they surprised everybody. Remember, the film starts out in black and white during the tornado and then
And
gets
then
into
flips
color.
on.
So I am sure this was one of those viral movies that people saw more than once.
After staying at the Hotel del Coronado, I've never been able to watch the movie again because they play it incessantly on their internal TV station at the Hotel del Coronado, which is where L.
Maybe Some
Frank
Like It
Baum
Hot.
wrote it. Yeah, yeah, Some Like It Hot. Yeah, that's the other channel. They play Some Like It Hot, and they play The Wizard of Oz nonstop.
Why the Wizard of Oz at Hotel Coronado?
Because L. Frank Baum he wrote the first book at the Hotel del Coronado.
I did not know that. There you
Yes.
go, folks. Just a little bit more useless knowledge for your day. Gotcha.
Absolutely.
That's cool.
One of my favorite
1940
hotels on the planet.
1945, surrender made public on VJ Day. 61, Berlin is divided east-west, and you could pass from the west at the Brandenburg Gate.
Except when I was there 2 years ago at Christmas time, they were working on the Brandenburg Gate and you couldn't walk through.
1969, Woodstock Festival opens in Bethel, New York. One of my favorite documentaries. I was born about 18 years too late. I don't know if I would have
Yep.
gone being my type A personality, but who knows? And I remember this, Elvis Presley dying.
The king died on the throne.
1978, fatal Ford Pinto catches fire in Indiana. Yeah, there was
One of many.
making a left turn and the gas tank or something if they got hit in a certain spot.
Yeah, yeah. When you put the gas tank behind the structural member so that nothing is between the bumper and the structural member but a gas tank, it's really not the best idea.
And if you haven't seen the movie yet, you know the movie. I don't believe this was 100% based on Ford Pinto, but there's a movie called Class Action with Gene Hackman and Mary Elizabeth Mastrantonio. Good flick, and it's
Mhm.
about a class action suit against a car company that when it makes a left turn and gets hit from behind, it catches on fire.
Mm.
Good flick, and Gene Hackman is pretty much great in everything.
Yep.
1981, I had to put this in here being a tech weenie. The IBM, excuse me, I don't know why I did that. IBM PC Model 5150 hit
Wow.
stores with a starting price of $1,565. I think you needed a small bed pickup truck for this. Launched in the new era of personal PCs.
There we go.
Had to put this in here. 1982, back-to-back years. Fast Times at Ridgemont High. This was a coming-of-age film. What was the first coming-of-age film in 1981? My dad actually let me see this.
Was it Breakfast Club or?
No, Breakfast Club was 1985. You're 1981, Porky's.
Porky. Oh God.
And I got to tell you, I watched that again. I hadn't watched it in so many years, about 3 years ago. Holy crap.
I
So
cannot
funny.
I cannot stop laughing.
Today, but there are so many scenes.
There's just the
Fortunately, they prostituted it 2 more times.
with awful movies, but yes,
But
of
Fast
course.
Times at Ridgemont High, Cameron Crowe wrote this, and a little bit of his own life story, and a great soundtrack. It
Tasty
definitely is a bit of a
Waves.
time warp.
Tasty Waves, Cool Buzz, Hey Bud, Let's Party.
There you go, bud. 1985, Michael Jackson buys
Oh, yeah,
Beatles
that's right.
publishing rights for 251 compositions, paid just under $50 million, sold to Sony in 2008. Now, rather ironically, do you know who told Michael Jackson he should get involved in publishing?
No clue.
Paul McCartney.
Of course.
In 1983, they worked on a song together, and Michael Jackson was looking for some advice what to do with his money.
Yeah.
After Michael Jackson bought the rights, Paul McCartney never talked to Michael Jackson.
Yeah. I was thinking this. Wait a minute. Hold on here.
I actually didn't have time. I wanted to see what it was sold for in 2008
Yeah.
because I think that was one hell of an investment. Who
Oh,
knows
it
if
was
that would be
probably-
worth today? I believe this was a lot of their earlier stuff. I think it was pre-65 or pre-66. I believe because there was some argument with the original company that was recording because they owned 50% of the right or something. It was some crazy legal thing. And Paul and John basically didn't have, I don't know if they didn't have the money or they didn't have the ability to buy it or they didn't want to sell it to him. Who knows? Kind of crazy. It was a crazy legal crap.
Hey, Paul, you gave him the advice.
Yep.
You
I
just
mixed
took
up
it.
my year here. 1984, Red
Oh,
Dawn. Was
Another
like,
coming of
I
age
put
movie.
this in here not because it was a great movie, although it was a very interesting cast, right?
Yes.
C. Thomas Howell, you had Charlie Sheen,
Yep.
Patrick Swayze.
Patrick Swayze.
Oh my God, who's Ray Don Chong was.
Yep.
Some interesting, good cast. The reason why I put it in there, I didn't realize this, but of course, the Reagan era, the ultra religious right wanted to put more ratings on movies. And this was the first movie that was rated
PG-13.
PG-13. That's why I was allowed to go to Porky's in 81. They didn't have
Which that
I'm
was, yeah.
13 in 81. I don't think you'd let a 13-year-old go see that movie.
No, I don't think so.
No.
I'm amazed that it was PG.
Crap. That would probably be an NC-17 or whatever the hell they have on it today.
Easily.
So I thought this was interesting. I don't know who the hell would do this, but TSA finds stolen Civil War era cannonball in a passenger suitcase at an Alabama airport. Now, number
Okay.
one, why would you bring a cannonball through TSA? And number two, why would you put it in a suitcase? Ship it for crying. Obviously, it's pretty heavy. And the other thing I didn't see was where the hell was this thing stolen from?
Yeah. Yeah. It's funny. I had an old client at my old firm that he had gone to work after 9/11. He went to work for TSA as one of the guys that basically tests TSA. So they try and get through TSA with stuff in their suitcases and stuff like that. And he's like, you would be shocked at the stuff people try and bring through. So I'm not necessarily shocked that somebody would try and bring a cannonball.
I hear you. All right. You know what? This would have been a good Florida man story, but it happened in Alabama.
Unfortunately, yeah, it's an Alabama man story.
All right. Being the tech weenie that I am and the analytical weenie, and you got to look at some things every now and then. And I don't want to hear about this time is different. So the kick ratio, and on the right side, you can see what it's based on. It's the cyclically adjusted price to earnings ratio, or the PE ratio. So I think it's very interesting kind of looking at what is normalized versus what is high. So
Hmm.
what you want to do on the right side of this chart, this is showing you the deviation. So the average is 21.9,
Mm.
right? So that would be right here. Then you're looking at one standard deviation, two oh, sorry, this is the line here. So this is one standard deviation above, one below, and we're all the way up here. And there was only one time it was higher than this, and that was in 2000. Now, we have done this many times on the show where we said this time is different than
Mm.
the late 90s, and it 100% is. Euphoria, money being pushed towards tech stocks, that's the only some major similarities.
Mm.
I think this is something to look at when you are looking at valuations. And when I hear talking heads and analysts coming on TV going, no, we're still at fair value, and there's a lot. I think we're still undervalued in many areas. Show me where they are that's not tech. Then you
Yeah.
could probably point out a few. But I think this is very interesting because as we know, if those top 20, 30, 50 stocks all of a sudden decided to pull back on their capex 10, 20, 30%, doesn't mean they're not still making money. But now are
Mhm.
they showing, oh, wait a minute, you're not still investing in the future in the short or medium term? I think this would pull back into the low 30s, high 20s. I don't know. What are your thoughts?
Yeah, I totally agree with you. Once again, the momentum, I mean, I'll talk about this in my little piece, but we're seeing the AI trade. There's this kind of disbelief. It doesn't matter what the companies say, it's this disbelief. And the market just has these kind of weird animal spirits about it where it's a very crowded trade right now in AI and it's moving around all over the fence. So I totally agree with you. I think we're there. The interesting thing is it's that top, let's call it 10 to 15 stocks that are mostly AI related and things like that, that are really off the charts up here. But if you look at the general market, if you peel those guys off, they're really not. If you were to peel those off, the rest of it's down around 21, 20 at
Right.
this
More
point.
reasonable and average levels.
Yeah, it's more in an average. What I could see, and I mean, we've seen this throughout the summer, was a massive pullback in the AI trade. And then, of course, you had huge numbers come out of Google and Meta and all these players, and they're still spending money. So it's spilled back in, but you keep getting this back and forth where it's a super crowded trade right
Mm.
now.
Yeah. So the next chart is going through margins and valuations compared to a 5-year CAPE ratio trend. So
Mm.
just, I know it looks a little busy here, but if we're looking at this, this is the trend, right? This is the S&P 500. The dot plot here essentially is the CAPE ratio, and the blue mountain part of the chart is the operating margin.
Mm.
You can just see that margins, I mean, by far are the highest above the trend. That's because they're making money. They're printing,
Yeah.
they're crying out loud. But if you're just looking at the normal trend here, obviously we are well extended, and you always get a mean reversion at some point. Is
Mm.
that today, next week, next month, next year, who knows? But at some point there is a mean reversion. It has just been proven along the way. And you can see anytime we've gotten above the average trend line here, there has been a significant pullback. You can
Mhm.
see we here there's a little bit of an aberration, but that was going into COVID. And then here we got real high coming out of COVID with insane valuations. In 2022, we were down 22% for the year. We were down 30% at one point. What are your thoughts on this? I think this is a really good chart if you're
Yeah, I think
tracking it.
yeah, once again, I would say that it's not the general stock, but it is a very small subset of stocks and their derivations from there. I think more than anything, you got to be very careful about choosing the right companies within those areas, specifically anything related to the AI trade, because once again, the CapEx guys stop spending money. If we see any of those guys pull back, it's going to affect everybody across the board at that point.
Yeah. All right. Quickly, I got this slide here, which typically we do at the end of each quarter or
Yep.
the halftime. And if we didn't do it halfway through the year, but I thought this was just interesting that the year to date, the Dow is outperforming. And there's another reason why I never look at the Dow. They changed it again this year, right? It's 30 stocks. They swapped out two. I think last year they swapped out one. The year
Yep.
before so there's no commonality here to it. The S&P was up 10%. And if you just look back here, we could potentially have a fourth straight year of double digit gains. And again,
Mhm.
the financials, which I don't care for that sector at all, is lagging behind significantly. And you would
Mhm.
think they would do better with higher interest rates because they get good net interest margin on their deposits, and they're still suffering. What
Yep.
are your thoughts on this? Because for the most part, I think it's interesting. Real estate's doing pretty good.
It's exactly what I just was
30
focusing
years above
on.
six.
Yeah, I was just focusing on real estate. Yeah, it's interesting because you will see it do well when we see interest rates dropping, which we really hadn't seen interest rates dropping. They've just been steady, steady Eddie. And like I said, real estate's really done well. Now, look back over the last 5 to 10 years here, and it's largely been in the bottom. So it's about time for it to be up again. But yeah, I think that's very interesting. I think it's very interesting that we're just a little over halfway through the year and the S&P's up over 10%, well above its average at that point. So it's amazing.
People raising their price targets to over 8,000 now. I mean,
Yeah. Yeah.
please.
JP Morgan just did that this week. So yeah, I
And
think
your
it's
Denny, I think he's 8,300. He moved it up. Keep
unbelievable.
pumping, baby. Keep pumping.
Keep pumping. Yeah. Until it doesn't. All right. Let me quickly share your screen here. Grab this. Okay. Can you see that?
Give me a sec here.
There we go.
Yeah. Got it.
Cool. All right. So this is actually from a presentation I gave earlier this week, and I think it's really telling. This is the quiet stuff behind the scenes that's going on versus the yelling loudly AI trade all over the fence and everything else. Really three reports, but they all had one message: jobs, CPI, and PPI. So when we look at that, last Friday, jobs absolutely shocked the world by being down negative 23,000 versus a positive 88,000 expectation. Unemployment's at 4.1%. So that's a big slowdown. And we saw them go back and adjust numbers 3 to 4 months back as well, adjust them downward. But this is the first negative print we've seen all year. Then the next big number was Wednesday, CPI. Came in 3.4%, exactly where it was expected, up 0.1%, which was less actually than what was expected. So kind of flat number. And then today, PPI came in absolutely flat for the month, 4.7% year over year. The expectation had been 4.9%. So, what does that mean to us in the long run? It's because bad news became good news. Weak jobs, inflation cooling, that gives the Fed room to not do anything. And the rate cut bets, which I was watching the futures market, the rate cut bets going into last Friday's job number was that there was a 57% chance that we would see an interest rate raise from the Federal Reserve that has cratered down now to less than 2%. And they're betting up that there will be a drop, which I don't think there's going to be anything. I think the Fed's going to sit there and say, okay, well, we're going to just take a look at this now. But no matter what's going on, a big adjustment to this was the fact that oil came down and gas prices finally came down because they've worked themselves through the system a little bit. But or oil's up a little bit again, so we could see that pop up again from the gasoline supplies and things like that going forward if oil stays up to where it's at.
Yeah, good news, bad news. No matter what, they're trading it both ways. But
Yeah.
always with interest rates, it has always gone the other way, right?
Mm.
If they're not going to raise, market goes up. They think they're going to
Yeah.
lower it. You know what? They already traded ahead of that trade. They're going to sell it.
Yep. Yep. And if they think it's going to go up, everybody panics for months and wrings their hands like we were seeing. And once again, it's there. So cooling economy, cooling inflation, it just means there's more room down the road for lowering interest rates. And I think you still have some real hawkish crowd that's in that Federal Reserve room that still feels like stupidly we need to raise interest rates when it's not necessarily that the economy is overheating, it's just parts of the economy that are overheating. And one of the biggest of it was the cost of memory and things like that. So it's raised the cost of even personal computers like 3.5% for the month. Of course, going into new school and kids going to college and all that, a 3% rise in the cost of computers at that time period. All right, so let me share with you my last little screen here, which is our good old friend, the yen carry trade. As I talk about,
People missed your presentation last week. It was really good. You should put the link to that in the show notes.
I will do that so that it'll be right above here. I'll actually put it into on the YouTube channel. I'll put it above here. It'll be in the notes as well. But yeah, just click on that and it'll take you in. It explains the yen carry trade. Just a couple weeks ago, over the weekend, the US and the Japanese went in to prop up the yen. So if you look at this chart, that was right. And we saw the yen pop back up. We were at a 40-year low on the yen. And of course, it popped up and look what it's done. It just keeps wandering its way down again. So all these, and I always love these little machinations that, oh, we're going to go in and we're going to buy up the yen and this is going to prop it up. Yeah, the market doesn't care. And the problem is people are borrowing money super cheap in Japan because they've kept their interest rates virtually zero for the last 12 years. So people borrow money there and then they take it here and they buy AI stocks and everything else. And that can come unwound very quickly. Watch this very carefully. We will keep kind of our eye on it because this is something that could affect the markets because we have our Fed that is looking at interest rates, but we also have the Bank of Japan that'll also be looking at interest rates sometime in the middle of September. And if you see that unwind, you could see a snapback in the market, not necessarily meaning anything's bad about the stock market or our economy, but it does mean that those trades can come unwound because they're leveraged and we just need to keep our eye out on it and be prepared for it. So that's all today.
It was August 2 years ago that this happened.
Yeah,
And the market
2024.
pulled back, what, 10% in a month?
Yep. Yeah. It was literally like a week and a half. It's one of those things we just have to be prepared for. And it's not a time to panic, but it's a time to realize when that happens, don't freak out and make big changes and things like that at that time period, because it's likely to pull itself back together. But it is something that can happen and you just need to be prepared for it.
Yeah.
Thanks, folks. We appreciate you. As always, we are here for you. So make sure you subscribe to the channel. Make sure you give us an upvote whenever you can. And we'll see you guys back here next week.